Good evening, traders. Now, this webinar is on how to identify technical levels. Just before we begin, general advice warning. The following education session is not to be treated as personal advice. Forex CT provides general advice only that does not take into account your objectives, financial situation, or needs. Trading FX and CFDs involves a substantial degree of risk and should only be undertaken with risk capital. Investors do not own or have rights to underlying assets. Now, in this webinar, we're looking at how to identify our own technical levels. So similar to the daily technical email that you receive from Trading Central, which has different technical levels of support and resistance, we're trying to do our own thing. Now, here we've got gold. We can see it's been on an upwards trend for the entire 2017 so far. It's got its movements, up and down, wave-like movements. Now we see a bit of a trend though here, we're going upwards. So if we come over here and we draw a level of support, start it from here, and we run it along, we can see that it's been bouncing across this point. So it's obviously been using this as a level of support, touched it last night, and it's already pushed up a little bit off it. Again, supports and resistance levels will eventually be broken. There's no rule to how many times they will be respected. They could be respected 2 times, they could be respected a dozen times, but it's about trying to take advantage of them and knowing how to use them. So the beauty about a level of support, in this case, one would look at this and think, okay, I expect it to push off that support again for the 3rd time, as it has already done previously this year. So you can do a buy just above the support. You would set your stop loss below the support in case it is broken, because sooner or later it will happen. So you'd put a stop loss below the support anywhere down here, up to how much breathing room you think the trade requires. Now just keep in mind we are on the daily, so each candlestick represents 1 day. So back here is January of 2017. So on the daily, it generally gives us a stronger trend. And then, so you'd look at buying above the support, stop loss below the support, and take profit anywhere back up to where it came from. Now this blue horizontal line, that's a significant level for gold, around the 1260 level. You can see it's played around it quite often. It often touch it and just bounce around it. So you'd probably look at seeing a take profit below that level, because that's quite a significant level that it could come up and bounce off that. So take profit below the resistance, stop loss below the support, and in this case we're buying above the support. So that was our gold example that we wanted to cover. I mean, even if we look at it on the hourly, it looks very similar. If we just zoom out. 1 second while it loads. All right, and here we can see even on the hourly, sorry, you can see that same trend, being rather respectful so far of that support, and one could very well expect it to push up. Again, ensure you're putting a stop loss, because if it does break the support, you want to ensure that you exit it at the right level. Now, the other one we wanted to have a look at was Euro AUD. Here we go. Now, Euro AUD has a resistance level at about that 1.49. If we zoom out and we proceed on the 3 hourly, you can see that it's a level that it has bounced off multiple times here back, what's this, we're looking in August last year. Bounced up at multiple times here. Here it touched it again during the US elections, touched it and then instantaneously backed off. And then now it's again touched it just recently and pushed off. So traders would look out for this level. You'd either set an entry order or just wait and manually place a trade when it hits that point. Again, stop loss, you'd want to put it above the resistance. So we're selling below resistance, stop loss above resistance, and you'd look for a take profit at the next level. So one might think, here's the next level. You see it's touched it here and here, or down over here where it's played along multiple times. And that would be where you'd see it take profit anywhere around here and stop loss above that. And we can see it's already started to push down since it touched that. So well done who did spot that. That's Euro AUD. Let me just pick up the 3rd example. Third example we had was AUD USD. AUD USD. Now, AUD USD, if we zoom out even more, 4 hours. Go back here more. Put it to the daily. Now, if we look over the last year and a half or so, every time AUD USD has broken that 75 level, this blue level down the middle, it's quite a significant level. Every time it's broken it, it's then trended down to the 72 level at the very least. So you can see back here, what's this, in 2015, broke 75 on the downwards trend, and then got down at the very least to 72, if not even further down. Start of last year, broke it on the downwards, went down to 72, pushed off again. Here again, it broke that 75, played around a little bit, and then pushed down to 72. And then now again, it's broken that 75. So traders that were keeping an eye on this would have expected this to push down further as it broke that 75 and trend down towards 72. It's already moved about over 100 pips since moving off, breaking that 75. Could play around here, but a lot of traders looking at this pattern would expect it to then move down to 72. So in this case, one would have had a sell below 75 with the stop loss above 75 in case it broke back through, and a take profit. Again, give it a bit of breathing room, otherwise you might get a situation like this where a little tail will nick it before it moves down. And your take profit, you'd probably look at having it somewhere around here. So again, well done anyone that did spot that. So those were our three examples: Euro AUD, AUD USD, and gold. Again, the daily is a great level to look at because it's more significant, the levels of support and resistance if respected on the daily, but even the hourly is fine. It's just a matter of having a look at them and spotting them, and then setting your stop loss and take profit accordingly around them and appropriately. All right, traders, we'll continue next week and we'll have a few more examples to go over, and well done again anyone that did take advantage of those over the last week.